Howdy, y'all. Welcome to Mortgage Minutes, where we demystify the loan process for you. I'm your host, Austin Baker, along with my co-host, Jonathan Buzz. What's up? Woo! All right, Jonathan, what are we talking about today?
So we're going to talk about when to lock in your interest rate. But before we dig into that, Austin, let's talk about why you have to lock in your interest rate in the first place.
Yeah, great question. So before you close on a house, if you are getting a mortgage, you have to lock in your interest rate. And you have to lock it in before closing because your file has to be underwritten according to that interest rate. So it's really important that you check with your lender as to how long before closing you need to lock in your rate, because it's got to go through underwriting and then it's got to go through their closing and through the title company, all before you get to closing. So that could be days, it could be weeks. So as a borrower or as a realtor, you need to be asking, hey, how long do we have before we need to lock in our interest rate?
Exactly. So let's get into when to lock. And so when it comes to interest rates and locking them in, you need to know three big things that can happen any given day. And the first one is rates can be rising, so things could be getting worse.
Ouch.
Not good. And the second thing is the converse. Things could be getting better. Rates could be falling, which is really good. And the third option here is rates could be neutral. Could be days, could be weeks, but they could be neutral. And so these three things happen every day, sometimes multiple times a day, Austin.
That's right. And so what we want to do is we want to know in which of these options are we locking in your interest rate or are we floating your interest rate? So in a rising rate, we always recommend locking, especially if you're in a purchase transaction. And we'll get into that in a second, but we don't want to get cute with the market. If rates are rising, they can get a lot worse before they can get better before your closing date. And so we want to go ahead and lock before it gets any worse.
Exactly. So there's much more to lose than to gain in a rising market.
Option two, rates are getting better. We're in an improving market. The analogy we use for this, we're going to float if we have time. So we're not going to lock in here if we have time. And the analogy we use is a dropping ball. So if rates are dropping, they're dropping like a ball. And if we lock them in the middle of price improvements, we don't know that we got all the way to the floor. We might have locked extremely prematurely. So we're going to wait until that ball hits the ground, and we're going to lock it on the bounce.
On the bounce up. Awesome. And then this last one is neutral. What are we doing here? We're locking.
Why?
And the reason why we're locking is because Austin always say rates go up like a rocket,
but they come down like a feather.
Like a feather.
And the reason for that is for all the lenders out there, if they close on a loan and let's say rates drop drastically in the next 30 to 60 days, the loan they just closed is going to refinance. And if that happens, it's called an early payoff or an EPO. And that causes a shock to the system, especially if that's a national issue. If all of a sudden all these mortgages that closed in the last 60, 90 days refinance all of a sudden, then the banks and the lenders that lent the money, they were not able to make any money, which I know you're not necessarily sad about, but if they all go out of business, you can't borrow any more money.
Exactly.
And so it's really important that the financial institutions are healthy and profitable. And so there are protections in place that even though you might see things like, oh, the Fed cut rates or the market dropped or these other things, that's not necessarily going to translate to an immediate crazy improvement in rates. And so rates are going to come down like a feather, but that's not how they go up. They go up like a rocket. So you want to be really careful whenever you're floating and whenever you're locking, that you understand the risk and reward of doing both.
Exactly. And so that's why we want you to work with the great lender. And Austin and I have a lot of experience, and we want to help you in this decision and know when to walk. So we'll see you guys later. Adios.
Adios. Woo! When to walk.